All right, let's unpack this. Today, we're embarking on a deep dive. We're looking at your collected sources on the very fast-moving world of cryptocurrency.
It really is.
Really?
Constantly buzzing, isn't it? Predictions, regulations, market shifts.
Yeah.
It's a lot.
It is. And that's our mission today, right? To cut through all that noise, pull out the really important stuff, the surprising bits from what you've been reading, basically help you get up to speed quickly.
Exactly. Sifting through the sheer volume is key.
So today's focus, we'll be looking at some pretty bold Bitcoin price forecasts. Very bold. Also, significant legislative stuff happening over in the US.
The regulatory side is always crucial.
Definitely. And we'll take a look at how Europe's doing in this global crypto race. Seems like there are some concerns there.
There are. We'll get into that.
And then some interesting things happening with Bitcoin ETFs, plus what some people are calling smart money moves in the altcoin market. We're going to try and connect the dots, show you what's really moving the needle in crypto right now.
Yeah, what's truly compelling is just how fast it all changes. You really have to filter out the noise. We're looking at individual assets, sure, but also the thinking behind those moves and the big picture stuff, like regulations shaping the whole field.
Right.
Understanding how they all interact, that's the key.
Absolutely. And speaking of moving the needle, let's dive straight into those Bitcoin price predictions. Because, wow, they really show the extremes, don't they?
They certainly do.
Coinpedia News, for instance, suggested Bitcoin could see a strong jump, hitting $110,000.
Right. Ambitious, but within the realm of, market cycle thinking for some.
But that's not even the wildest one. The Crypto Times reported on an analyst, Brad Mills,
Oh, yeah.
predicting Bitcoin could soar to, wait for it, $3 million per coin.
3 million. Okay. That's definitely out there.
Right. So what does that kind of prediction tell us about maybe the beliefs driving the market, especially compared to the, let's say, more conservative $110 K? Are these just different maths or like totally different visions for Bitcoin?
That's a really critical distinction. The $3 million figure, that often stems from what people call a hyper-Bitcoinization thesis.
Hyper-Bitcoinization.
Yeah, the idea that Bitcoin basically absorbs a huge chunk of global wealth, maybe even replaces things like gold or becomes a global reserve asset. It's a very long-term, extremely optimistic view.
Okay, so a fundamental shift in the global financial system.
Exactly. Whereas the $110,000 prediction, that's probably based more on traditional market cycles, maybe historical trends, looking at past performance or projecting growth within the current financial setup. It just highlights this massive gap in how different people value Bitcoin and, honestly, the sheer speculative energy in parts of the market.
Yeah, indeed. And while those predictions are fascinating, the real sort of structural change often comes from regulation, doesn't it?
Almost always. That's where the foundations are laid.
So let's shift from those big numbers to what's actually happening, boots on the ground in the U.S. Senate. Crypto Newsland reported the Senate approved the Genius Act, landmark vote, apparently.
Very significant.
First major crypto bill setting rules for stablecoins.
Yeah, this is a big one.
Yeah.
Because the Genius Act, it doesn't just say stablecoins need reserves.
Right.
It specifies equal cash or treasury reserves and mandates strict auditing.
Okay, so proper backing, properly checked.
Exactly. The main goal seems to be boosting the U.S. dollar's role in the digital world by making sure these dollar-peg stablecoins are genuinely stable and reliable.
Makes sense.
But the question that often comes up, does it go far enough? Or could it actually stifle some innovation by being too rigid, too prescriptive?
Right.
Especially when the tech is still evolving so quickly.
That's always the balancing act, isn't it? Regulation versus innovation.
Always.
And while the U.S. seems to be moving towards more defined rules, we're also seeing clear signs of demand for these regulated products. Its Bitcoin world highlighted US Spot Bitcoin ETFs.
Ah, yes, the ETFs.
Saw remarkable inflows recently. $217 million. Now, for our listeners, can you just quickly explain what inflows actually means here and why is a spot Bitcoin ETF such a big deal?
Absolutely. So inflows just means new money is coming into these funds. People are actively buying shares of the ETF.
Okay, so fresh investment.
Exactly. And this directly forces the ETF managers to go out and buy more actual Bitcoin on the market to back those shares. It's not just money sloshing around, it's new demand pushing up the potential price, showing real investor confidence.
Got it. And the spot part?
That's crucial. Spot means these ETFs hold real Bitcoin. Physical Bitcoin, essentially, held in custody.
Hmm.
Not just futures contracts, which are bets on the future price.
Ah, okay. So it's direct exposure.
Precisely. This makes them way more attractive to big institutional investors, traditional wealth managers,
Yeah.
people who want exposure to Bitcoin itself, but need it packaged in a familiar, regulated wrapper like an ETF.
Right. Something they understand and trust.
Yeah. It's a pivotal shift. It treats Bitcoin more like a legitimate asset class, like gold or stocks, potentially opening the door for a lot more conservative institutional money to come in.
So the US is definitely making moves, building a more sort of mature market infrastructure. But this brings up that global competition point again.
Mhm.
What about other places? Quantribune EN shared a pretty stark warning about Europe. Came from Franklin Templeton, a major asset manager.
Oh, what did they say?
They basically said Europe, which was actually kind of a pioneer in crypto rules.
With Micah. Yeah.
Right. They might soon become, and this is a direct quote, nothing more than a corridor through which innovation passes without ever being retained.
Wow, that's blunt, a corridor.
Yeah. So innovation comes in but doesn't stick around.
It raises a really important question about, strategy versus just having rules. Europe was early with Micah, setting up a framework.
They were ahead of the game for a while.
For sure. But now the U.S. and parts of Asia seem to be moving faster, maybe with approaches that are seen as more business-friendly, more geared towards actually fostering innovation, not just regulating it.
So it's not just about the rules themselves, but the whole environment.
Exactly.
Yeah.
Franklin Templeton's warning isn't just about paragraphs in a law. It's about creating a place where crypto businesses actually want to set up shop, where they can thrive, attract talent, keep their capital. Watching these things globally, it's actually quite rare to see countries get that balance right, that sweet spot between strong rules and genuinely encouraging something new like crypto. Many start off okay, but then they either clamp down too hard or they just don't adapt quickly enough. This warning for Europe, it feels like a significant wake-up call for any region wanting to stay competitive in this space.
Puts it in perspective, definitely. Okay, let's shift gears slightly. Let's talk altcoins.
All right. Beyond Bitcoin.
Crypto Newsline was talking about smart money, accumulating certain altcoins, getting ready for the next potential altcoin season. Now, for anyone not familiar, who exactly are we talking about with smart money, and why should we care what they're doing?
Good question. So smart money in crypto usually means the big, sophisticated players, the institutional funds, venture capitalists, maybe some very wealthy, very experienced individual traders, sometimes called whales.
Okay, the insiders, basically.
Kind of. Their moves are watched closely because, unlike maybe smaller retail investors, their decisions are generally based on deep research, long-term thinking, a real understanding of the market mechanics. They're not usually just chasing hype.
So when they start accumulating, buying up coins, especially when the market's down.
Exactly. It suggests they see long-term value, a strategic opportunity, not just a quick flip. It's often seen as a leading indicator.
Interesting. And the source you looked at highlighted a few specific coins. CRO, for instance, said it's gaining momentum because of rising utility.
Yes, CRO, the token for crypto.com. The key word there is utility.
Meaning it actually does something?
Right. It's not just speculative. People apparently need CRO for trading discounts, for payment features, for other services on the crypto.com platform. When a token has real use cases within its ecosystem, it builds a potentially stronger foundation for its value, different from just hype, suggests more organic, sustainable demand.
Okay. Then there was PI, apparently eyeing a rebound as 68 million tokens unlock, aimed at boosting network activity. What are token unlocks, and why is that a double-edged sword?
Token unlocks.
Yeah.
Yeah, they're always significant events. It basically means a large number of tokens that were previously locked up, maybe held by the founding team, early investors, advisors, are suddenly released onto the open market.
So potentially a lot of new supply hitting at once.
Exactly.
Right.
Which can often lead to heavy selling pressure if those holders decide to take profits. That's the risk.
The hope here for PI is?
The hope is that this new supply actually energizes the network, increases liquidity, makes tokens available for new users or developers to build things, maybe stimulating enough new demand to absorb the new supply. It's always a bit of a gamble, a high-stakes moment for any project.
Got it. And PEPE was also mentioned, showing bullish strength.
Yes, PEPE. Now, that's a very different beast. It's a classic meme coin.
Right. Driven by vibes.
Pretty much. Community buzz, social media trends, pure speculation, rather than any deep technological utility like CRO might have. Its strength shows just how powerful collective enthusiasm and, frankly, viral marketing can be in crypto. Operates on totally different fundamentals.
Okay. But maybe the most intriguing altcoin case mentioned was Kaspa.
Ah, Kaspa, yes.
Captain Altcoin reported its price crashed pretty hard, like 65% down from its high back in August 2024, and hasn't really had a strong breakout since.
Yeah, a significant drop.
Yeah, despite that huge decline, the report says its top wallets, presumably this smart money we were talking about, they're reportedly still buying KAS. What's the takeaway there? Why keep buying something that's fallen so much?
This is really fascinating, isn't it? It's quite counterintuitive from a short-term view.
Totally.
The fact that these large, presumably well-informed wallets are continuing to accumulate Kaspa despite that big price crash. It strongly suggests they have deep conviction in the project's long-term potential.
So they're looking past the current price chart.
Exactly. They seem to believe in the underlying technology, maybe the development roadmap or whatever unique value Kaspa offers. They aren't spooked by the short-term volatility. For them, a 65% drop isn't necessarily a sell signal. It could be a buy-the-dip opportunity, a chance to get more at a lower price because they're betting on its fundamental value over the long haul.
Real conviction play then.
Seems like it. It points to a belief that isn't easily shaken by market sentiment alone.
Okay, so let's try and pull this all together. What does it all mean? We've definitely seen a really interesting snapshot of the crypto world today.
For sure. A lot of different currents.
Yeah, from those incredibly wide Bitcoin price predictions, right? You've got the $110 maybe based on cycles versus the $3 million hyper-Bitcoinization dream shows that real tension in outlooks.
Huge range of expectations.
Then the clear signal from the US Spot Bitcoin ETFs, $217 million in inflows isn't trivial. That signals real demand, a major step towards mainstream institutional acceptance.
A definite sign of maturation, yeah.
We also touched on that landmark Genius Act approval in the US Senate, setting actual rules for stablecoins, demanding proper reserves, trying to build trust.
A foundational piece of regulation.
While at the same time, hearing that stark warning from Franklin Templeton about Europe potentially falling behind the US and Asia, losing its innovative edge if it's not careful.
The global competition is fierce.
And then we looked at the altcoin scene through the lens of smart money, whether it's accumulating CRO for its growing utility,
building on fundamentals,
or navigating that tricky token unlock moment for PI.
High risk, potential high reward.
Understanding the purely speculative, sentiment-driven power behind something like PEPE.
The meme coin phenomena.
And maybe most tellingly, that intriguing case of Kaspa. Top wallets still buying KAS even after a 65% crash. That speaks volumes about conviction, doesn't it?
It really does. A belief in something beyond the immediate price action.
So, thinking about all that, here's maybe where it gets really interesting for you, the listener.
Yeah, what's the provocative thought here?
Well, if you've got institutional investors showing such strong demand for regulated Bitcoin products, these ETFs, signaling this sort of growing trust within the traditional finance system.
Integrating into the old world, in a way.
Right. But at the same time, you have these savvy, smart money players accumulating something like Kaspa after a massive crash, operating completely outside that traditional comfort zone, based purely on their conviction in the tech.
Two seemingly different kinds of confidence, maybe.
Exactly. What does this combination truly suggest about the deeper, maybe the longer-term beliefs driving the crypto space? Beliefs that seem to persist regardless of all this short-term volatility we see.
Interesting point.
That raises a question, I think. What assumptions might you be making about risk, about value, about where digital assets are actually heading in this market that's just constantly changing, especially when you see these contrasting yet equally compelling signals of conviction playing out?